Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And wow, what a day for this Thursday, September 14th, 2023. First, had no computer yesterday. I apologize. My computers are fine. We couldn't get the signal from Xfinity, and that's who I use, to work. It kept coming. They said in the house, and then it would go down. Then it would come up. I finally found a wonderful person at about 4 in the morning, 4:30 this morning, that I called, got somebody, and it was great. We worked on it, and then they said, I think it's a bigger issue, that we have another level that we can go to. It takes 2 hours to go through your whole modem connection. 2 hours. It's automated. You'll get a text message when it's complete. It took about 2.5 hours, by the way. I got the text message. I still couldn't get it to come up. And then it dawned on me, if they made a fix and there's no way for me to know, why not take the mesh network, and most of us have those in some manner through the house, take it down and start it off one at a time. I'm back to operational. We got the live webinar today. Thank you for attending. And my computer's firing up in all the speed. I have high speeds because I have the business lines. So I thank Xfinity, but I am beyond exhausted. When I tell you tired on a scale 1 to 10, between all that, probably a 10. I'm going to bed early tonight, and I'll feel very refreshed tomorrow. But would you believe, in looking at the stock market, the rally today, let's talk about that. You get a strong PPI number, much bigger than the trade was looking for, than the estimates. Number 2, retail sales up, stronger than the market thinks, and the market interprets that as bullish. I'm lost. I thought the Fed said it was dependent on data. The CPI data wasn't weak. PPI is strong. Retail sales are strong. So why do traders think? And they do. I just checked the CME FedWatch page. 97% probability that the Fed will not raise rates this September 20th. If I were a voting member, it's all I can tell you. If you're data dependent, you're going with a hike. Now, I know you're going to say, but Ira, you don't understand. We're at a peak in it. It's going to stop. No, that's not what data dependent is. Data dependent is you're looking for the data to go the other way now, and then I can see that you want to pause and see, does it keep going that way? But it's going up. You could always tell me you have an excuse. Oh, Ira, it's gasoline. Does gasoline look like it's going down? Does $94 here in Brent look like it's going back down to 75 anytime soon? Did you not hear OPEC Plus is keeping oil off the market? Have you not heard if the economy is going to get better, as the Fed must think, if they're not going to do anything here to slow it down because it's on fire? You don't think that you're going to get more demand for the oil and keep it going? So I don't know what people are thinking. I'm not in that school, but they get paid the big bucks, I guess, right? That's the way to look at it. I would be telling you just what I said. And by the way, the bond and note traders agree with me. They keep putting these markets down, as you'll see, not up. And that means they're looking at rates going up. I saw today, the U.S. Treasury did an auction today. What do you think you'd get from the Treasury for a 4-week T-bill? 4 weeks. Tie your money up. 5.28%. Not bad. Fully and guaranteed. Again, unable to make that attack at the 18-day average of closes. I was watching Citadel's president, Ken Griffin, come out and talk about what he thought, and he thinks the market's rich. Ray Dalio's not even putting his money from Bridgewater into Treasury instruments. He just wants cash right now. These guys are pretty bright. That doesn't mean they're right. Does not mean they're right. The market is making, if you will, all of these bright guys look not so bright. When the correction happens, it happens. Hasn't happened, though. And look at how nice we've come back. Now, in all fairness here, I worked with you on this break, and I said at some point you got to think. You pull the rubber band, it comes up, you correct. you're still in this correction phase. You haven't gone anywhere yet, made new highs on this move. But for the short term, you're back in an uptrend. With the action of today, you now have higher lows, higher highs. That is an uptrend. Number two, when I look at the market, it's over the 18-day average of closes, so the bias is up. So that tells me the pros are looking at support at the 45.20 level. They wouldn't want to see prices under 44.94. Where are they looking for resistance? Probably the Bollinger Band. And that's right up here at the 46.03 level. Doesn't mean it has to get there. That's another 40 points away. That's a pretty big rally. But that's what they're looking at, I would think. And momentum-wise, we're just about to enter overbought territory. Any reading over 70 is overbought the way that I teach overbought, oversold conditions. Would I tell traders to buy a 69 reading? No. I'd rather buy embedded. I'll buy higher than that once you embed, but not that. When I get into I put the wrong word up here. I'm looking at this. All right, this is the NASDAQ. I don't know what I did. All right, that should be the mini, the micro E-mini. I typed it wrong. I did this all today. Notice we're in the Decembers. I told you I'm tired. I will fix that. It doesn't mean I can't finish this. You're overbought. If you rally, maybe the Bollinger Band, get concerned if prices take out right here, 15,406. That would be a worry number. But from where you're at, that's very far away. You're sitting here right now at 15,682. And the market knows that there's going to be an auto strike tonight. It's built in. Nobody said that they've reached a deal of any type. In fact, the automakers say they're not even hearing from the union on latest proposals. So maybe there's something there we don't know, but I would think 146,000 people going out on strike tonight, and the market's still up. Okay. Look at how the market's still here in a bullish trend. Are you overbought? A 69.6 reading is very close to getting overbought. And the market that's the weakest, and I told you that, and it would have resistance, I thought at least, would be this market. Why? Because if you take a look at what you've got here, I think I can come down and show you. You had come down here Wednesday. Now, I know my tapes were all screwed up and what we could do. I'm sorry. There's nothing I can do when you lose the internet. But this is where I thought the resistance would be. You're oversold. You're in a zone for short covering since you're right by the Bollinger Band. The market turns up today, goes right back to that zone and runs out of steam. It did negate the downtrend. You now have a higher high and a lower low, and you're oversold. But it did its job. In the T-bonds, does this look like a market that's taken off the other way, saying the Fed is ready to break rates? Not in any manner to me. And when I come to the 5-year notes, kaboom, look at how this market, it's got the lower highs, lower lows. It did hit the objective where I thought the pros would take money off the table and gave you a bounce back to the 18-day average of closes. It is still in the bear camp. It is, however, oversold. And oversold, to me, doesn't necessarily attract new selling. In the dollar index, you're right up to the area where I think you're going to run into problems, the upper Bollinger Band. Problems do not mean I'm bearish. Understand that. It's where, like other areas, it's setting itself up for a correction off that you want to take advantage of. If you're going to be wrong a market, you want to be wrong buying the dollar until it loses the uptrend. And it's well established in an uptrend, and you're well established in a downtrend in the euro. So Ms. Lagarde, the president of the European Central Bank, I watched her whole speech today, went a quarter-point hike. Not a unanimous decision. She did not have the blessing of all the members. But what she did to appease people is she said, we're through for the moment raising rates unless the data warrants we come back to do so. So the door is open, but on the other hand, they've raised the rates. Now they're looking at problems. 0.7% growth this year, maybe 1% growth next year, and looking out into 2025, 1.4% or 5% growth. Not very strong. Market didn't like hearing that. Away you went. She addressed the factor that I've told you. They, being the European Union, very sensitive to oil prices. this is just draining. It's a tax on the whole economy as the money is just going. You work hard and you're paying more and more for the energy. Winter's not here yet. What do you do if you get a cold winter? Another problem that they've got. So this is going to be serious. In the British pound, I've been wanting to get short on rallies. It's not even giving you the chance. Notice how it's staying right here. Europe is just sinking away in front of your eyes as the dollar wins by default. That's what's going on. Bitcoin, back into a minor uptrend, momentum up, trend up. Maybe you can get back to the 27,540 level. The battleground will continue to be for support at the 18-day average of closes. You went all the way up now back to the 18-day average of resistance of the differential between Brent and WTI. Get over it. It means that the Brent's going to gain on the WTI. Embedded readings running just under the Bollinger Band. It doesn't get any more bullish than this. And every day you're making a higher high. Are you seeing that? It's not even letting you buy on a pullback in the market. Same for WTI. These markets are just unbelievably strong. Heating oil. I did make the change. I told you I would. Got a market that is in the early stages of trying to embed. You broke out of the sideways action, latched on to that gorilla glue trade where you get on the top Bollinger Band, and novice traders will tell you, oh, that market's overdone. It's not overdone. It's latched on to being bullish. If it embeds, it even gets more bullish, and this is going into the winter season. Farmer's Almanac says it's going to be a cold one. Last, the natural gas. All right. Market playing a bit of a game here, trying to stay over the 100 and the 18-day average. It's the first attempt at being friendly. But the overall pattern, follow my hand here, is that you've got a sideways market locked in the Bollinger Bands and you're churning away right now. So I don't want you to churn your time away. I want you to take advantage of the offers that we have. All you need to do is go to our website under free offers, give a click. Just where you see us coming to this. And once you do so, all the offers behind are going to light up. And once they light up, what you can do is you click on them. And as you click, they go into a shopping cart for yourself. In that shopping cart, you have what you need. You're going to give us your email address, your name, so that we can send these to you via email. You pick the different offers you want, and there's just so many in here. Some of the coolest offers you've seen. Price counts, if you don't know what they are, learn. What a price count does, and it's here, you'll get a chart from us every day. And it says, hey, first count, second, third. We teach you. We've got a whole thing that the brokers can send you as to how they work. They're not about buy here, sell there. They're once a trend is established, how far might that trend go? It's a very cool tool. How do you get this? Move your cursor to the top. You'll see an icon, click it, or go to our website, iraepstein.com on the far left, free offers. I'm Ira, going to bed. You have a great evening, and I'll see you first thing in the morning.